So this is Southwest Louisiana Credit Union Smart Money Tips for the first time home buyer. Another installment of Smart Money Moves in 2021. This is a guide through the process. So a lot of times in going through different things in life, you hear it's a process, it's a process. So just like anything else, the home buying step is a process. But we believe at Southwest Louisiana Credit Union, we have the people, the resources, and the tools to make that process as painless as possible and as smooth as possible if you take some of the advice and tips that Jessica is going to share with us on today. Let's see. Next slide. Oh, there we go. So time for a new home, own it. So again, we're Southwest Louisiana Credit Union, and those two beautiful faces there on the screen are Jessica and Sandra, and they are our real estate agents in the real estate department here at Southwest Louisiana Credit Union. So our real estate department is currently housed at our McNeese Street location, which is our main office for Southwest Louisiana Credit Union. Previously, Jessica was at the Kirby Street office, which is where real estate was, and then it moved to Ryan Street's office, and then the hurricane happened. So now we're temporarily, her office is temporarily here at the McNeese Street location. So if you're interested, in coming and speaking with her or a member of her team about real estate, for right now, you'll have to come to the McNeese Street location at 2255 East McNeese Street on the corner of McNeese and 5th Avenue. But once our Ryan Street branch opens back up, we get that finished being rebuilt. It may be back there, so I'm not sure. But for right now, all things real estate are here at the McNeese branch location here in Lake Charles, Louisiana. Anybody at the other branches can direct you to Jessica and her team, but you'll eventually have to come. They can give you information, pamphlets, and that kind of thing. But to meet with Miss Jessica and her team, you have to come to the McNeese Street location. All right, so we're not going to go into a lot of detail with the image that's on the screen here, but basically at Southwest Louisiana Credit Union, we want you to know that your credit union, Southwest, can handle all of your real estate needs. So if you're out there and you hear about rural development, or you hear about VA loans, or different things, HELOCs, or do they do land only? We do it all. We can handle it all for you. So whether you're a first-time home buyer or purchasing another home or a piece of property, we can handle that for you. So Miss Jessica can meet with you and your team, meet with you and talk about all the ins and outs of the different services and real estate options and products that we have, how we can best serve you based on what you are looking to do. There's a QR code in the bottom of your screen. If you want information, just other information about real estate, you may not be a first-time home buyer. You can simply scan your phone or open your camera and scan the QR code, and it'll take you to our real estate page on our website, where you can find some other information about our real estate department here at Southwest, and basically what's on this screen here. Okay, so you're thinking about buying a new home or purchasing your first home. And so what we want to basically tell you here is that purchasing a home is one of the biggest decisions, if not perhaps the biggest decision financial wise, that you'll probably make in your lifetime. I don't know nothing that costs more. I mean, I don't know, maybe there's something out there, but I don't know anything that you probably spend more money on probably than the cost of a home. And not only is it a big decision, but it's a big commitment. And so we have here three main things, areas to think about when purchasing a home. The financial obligation, because it is an obligation that you're committing to, property characteristics. So that would be what you want in your home, or what you're looking for, and of course the documentation and stuff that's needed. So I'll let Miss Jessica maybe just kind of go into details or anything about that commitment and that obligation.
So yes, like Makita was saying, it is a big financial obligation when you're purchasing a home. Typically, it is the single most the biggest purchase you're going to do in your life. So you want to be prepared. And that's what we're here for today, is to get the word out there on membership being prepared when purchasing their home.
So you're going to be paying for it for a good while, more than likely. So, definitely knowing that that's a financial commitment or financial obligation that you're committing to be married to for longer than a few years.
Yeah.
So, that's just something to consider. And so that's why we want to make sure that you have the tips and the tools and things to put yourself in the position to know if this is the right time for you. Are you ready to own it? So some things to think about that's going to come into play when you are pursuing the home buying process is, do you have a stable job? Are you able to pay your monthly bills and put away into savings? You don't want to get into a situation where, even though, it's very important that you have a home for your family, but that you're absolutely tapped out at the end of the month, but you don't have money to pay your other bills and other emergencies and things and to live basically. So you don't want to put yourself in a position to where, you don't have money to pay your other bills, and you still got to have lights in your house, you still got to have utilities and those types of things, and you still want to be able to live and put a little money aside for life in general. So you want to, keep in mind what your current credit score is and know that, if there's some work that needs to be done, or if you're in a good place, how you can maintain that. Do you have a down payment saved? You have some money saved aside that would coincide with the kind of home that you potentially want to have or build or buy. Is that down payment conducive to what you need for the kind of home that you want to have, or know what it's going to take to get that money in the bank for you to be able to have what you desire? And then, thinking about the other monies that's going to come up in the process. So with appraisals, inspections, insurance, escrow. So there's some things that you're going to have some liquid resources for in the home buying process that you're going to have to pay for out of pocket. So you're going to have a little bit of money saved up so that you can take care of that.
So just to add to that, things you want to think about when you're purchasing your home, your seller can contribute towards your closing costs, but that's only a percentage of what they can contribute. You do have to make sure you have the other funds in order to make the whole transaction complete. For instance, your seller can't pay your down payment. When you're going through the different programs, depending on which program you end up going with, your seller can't pay your down payment, but they can help with all the other closing costs. So, just to add those tips that members may not know about, that's something you want to think about when you're purchasing a home. The different programs, for instance, USDA, 100% financing. There's no down payment, but there are other closing costs that you will have to pay for. So you want to keep that in mind, that in that particular program, your seller may end up paying so much of your closing costs where you are maybe bringing just a little bit to the table. But, just always keep in mind, you have to be prepared for your closing costs because you may end up contributing something.
That's a good point when you talked about USDA, and rural development falls under USDA.
Mm-hmm.
So you probably hear a lot about rural development as it being a great program to pursue if you qualify and if you're buying a home in the areas that that it pertains to. But like Jessica said, even though it's 100% financing, you still have to have some liquid money, some cash money that you may have to bring to the table for other fees and things like that come along with the home buying process. So just keep in mind, think about having a stable job. Is there a length of time, that mortgage lenders like to see you on a job?
Yes. So we will look, or what we're looking for is a 2-year job history. You don't have to be on a particular job for 2 years, but you have to have that history, and it has to be consistent. You can't have a break in employment. And what they mean by a break is, you're typically looking at a 4-month window without having employment at all. So there are only extenuating circumstances where if you go over that time frame, we can consider it not a break. For instance, a death. You had to, take care of someone because of that. We may, sometimes can consider that, but it's very limited and extenuating circumstances. And you just want to make sure you always have that 2-year job history.
Very good. So
Yeah.
keep that in mind. And we know that things have happened over the past year, and real estate is just one of those situations where you got to show that you're ready to do this and that you can do this. And especially here at Southwest Louisiana Credit Union, we want to do good by the member. So we're not going to put you in a situation that's going to ultimately hurt you or put you in a situation that is not going to turn out well for you. So Jessica and her team will talk with you and be transparent with you, and hope that you will be transparent with us so that we can let you know if this is the right time, or you making a good decision, or you making the best decision, and then to help figure out if you can afford it, or if you can afford what you particularly may want. But anyway, so just keep these things in mind when you are considering whether you want to move forward or if you're ready to move forward in the home buying process. All right, so these are just some mortgage terms that you will hear a lot about in the home buying process. So pre-qualification, or that would be the same thing as pre-approval, correct? Just borrowers pre-approved based on the credit and income. And you will hear about credit a little bit later in this presentation. Debt to income ratio, you hear that a lot, not only here with a mortgage loan, but anytime you're getting a loan for anything, you hear your debt to income. That's basically, how much debt you have as opposed to the money that you bring in monthly, and how much you can afford. There's a certain percentage that it's that lenders like to see you comfortable at. They don't, again, that's one of those situations where we don't want to put you, we're not going to let you get yourself into a situation where you're not going to have to worry about if you can put food on the table, an appraisal, and closing costs. So some of the costs that come towards the end of the home buying process that you would be responsible for paying. Anything specific you want to talk about on here?
Not exactly. Just, it's just terms that you want to be familiar with, especially debt to income ratio. Another one I will throw out there is loan to value. You'll hear people, or in the mortgage world, they'll say LTV. That means what you're borrowing versus what your home is worth. So, you'll hear that term a lot, but besides that, those four, and that one is pretty common.
Jessica might get mad at me when I ask this, but
Yes.
Is there a way that anybody could figure out their debt to income at home?
Yes, there is a way. So what you do, you want to look at the bills that reports on your credit bureau, and you look at the payment. So you take the payments, add all of them up, and divide it by your monthly gross income. So what you make a month before taxes, payments divided by monthly gross income, and that'll give you your debt to income ratio.
So for those debts, that would be like any credit cards, any loans, car payments. Do I put my current house payment in that, or what I think?
Well, if you're going to sell that house, and if that's something that's going to be gone before we close the other loan, you don't have to factor that in. But if you're planning on keeping that house, then yes, you have to factor that into your debt to income ratio. So anything that you have reporting on your bureau that you're planning on keeping prior to us closing your home loan, we will have to factor that in as a debt to income ratio. And even just to jump into it, your child support, if you're paying child support, we do have to factor that in. Besides that, it's everything else that reports on your bureau. So we're not going to look at utility bills. That's why we won't lend you more than a certain percentage, because we have to allow for those things, food, electricity, insurance, phones, those things that you have outside of a mortgage.
Shopping, I'm sorry. So good. So that was a really good tip. And I thought about it afterwards to put in a formula. So all of your debt divided by how much you bring home a month.
Yes.
And that percentage will be your debt to income ratio. Okay, awesome. So are you ready for shopping? How much do I qualify for and what should I spend? So something that you should think about, knowing what you can comfortably afford, and to me, more importantly, what you want to afford is most important. Because just because you may qualify for a $250,000 home, which is wonderful, but if you don't want the note that goes with that house, if that your note's $1,500 or $1,200, and you come from paying, whether it was rent or another home, you were paying $700-800 on, you're doubling your note. Do you want, even though you qualify for it, doesn't necessarily mean that you want the note that goes with it. So you want to know what you want your note to be or what you can comfortably afford, and pair that with the home that you may want to buy or look at buying. I like to begin with the end in mind. So know how much I want to pay, and then kind of build around that. Because you don't want to be miserable every month struggling to pay a $2,000 house note or a $1,500 house note, if where you were really most comfortable at was $800, or $850, $900. So you just don't want, because then you don't really get to enjoy, the house. You have it, but then you're struggling to pay for it. Or you're having to sacrifice other things, could be other essential things in your life, so that you can pay for a home for your family. But maybe you didn't need that much square footage, or maybe you didn't need a lot of the other bells and whistles that come along that kind of makes houses high or extra high. So just kind of think about what you want to afford, and determine what's important to you. And I think what we mean there is, what are your non-negotiables for your home? Do you need a certain amount of bedrooms? Do you, definitely have to have this many bathrooms? Are you looking for, what in your home, is the kitchen the place where everybody gathers? Is your living room the place? Do you want to entertain or not? To know what your home needs to be comfortable, and what you desire, based on what you know that you can afford. I mean, once you make I guess you should probably make a list. Maybe I have a wish list in my phone that I keep. And every time I think about something, I jot it down. Like, my next home has to have this. I have to have this. So know what's important, because everything's not important. Like, everything won't be as important as other things are. So once you get your non-negotiables, or your things that you definitely have to have in this home, then you can tailor, you can better narrow down what you're looking for, and find what fits your budget.
Right. So I always tell everyone when they sit in front of me, just think about what's out there, what you've seen, and what you can comfortably afford on a monthly basis. Again, just because you can afford it, do you really want to pay that? So just always think about those things when you're getting ready to buy a house.
So just to kind of piggyback on, document what you want. Listed are some of the most important, or some of the most asked questions. So, how many bedrooms and bathrooms? How many do I definitely need? Do I need storage or tons of extra space? Do I definitely want a big yard? Do I want a workshop in the back? Do I want a shop where I can store, or my husband or my significant other can store their, bikes and golf carts and whatever other toys and things that men like to have, and lawnmowers and things like that? Or do I want a she shed in the back, something that I can have a she shed with? Do I definitely want a certain amount of living space, square footage of that actually, you utilize inside the house? Certain upgrades that you want granite countertops, or you want certain kind of floors. Do you want to be in a certain school zone? Do you want to send your kids to a certain school? And think about where you work, how far you will be living from your job, the gas that it's going to take you to get from point A to point B. Are you living, is there a grocery store nearby? How far do you have to go to get to the nearest Walmart or the nearest convenience store? So those are just things to think about when like we just said, when figuring out what you want to afford, what you can afford, and when you're looking at what's out there. take these things into consideration, ask them yourself, because you don't want to be miserable after you've purchased a home somewhere and you realize you gotta drive 30 minutes to get to work or 45 minutes to get to work. It may be worth it to you, but you want to know that you want to have that kind of figured out ahead of time so that, after you've bought your home, you can enjoy going home every day and enjoying the fruits of your labor, enjoying what you have in your home and the ride home, and you're not miserable, or, you don't have to send your kids to school. You're out of zone. You can't get some out of zone permit or whatever. You have to send your kids to a certain school that you didn't necessarily want to send them at, or you preferred a different school. So just kind of think about that whenever you are deciding where you want to be and what you want to have in the home buying process. So, of course, what about my credit score? So the minimum credit score that's needed to apply for most mortgages is typically 620. So, you hear people all the time say, I don't think my credit's good enough, or my credit's low. I probably can't afford, or I won't get approved. So it seems like typically around 620 is what mortgage lenders will look at. Or if you have at least 620, we can begin working with you.
Right.
And in the next slide, I was kind of say this: if you know that there's some work that needs to be done on your credit, the next slide will kind of talk about getting started on your credit report and seeing what's there, what may need to be looked at or disputed, or what work needs to be done in regards to your credit if you want to get that credit score higher before you pursue the home buying process. Because just like any other loan, your credit score will help with your mortgage rate.
Right.
Yes.
Yes.
So.
Yes. One of the most important things that will help with your interest rate is your credit score. So if I can add to what Makita was saying, 620 is where we are in the industry now. Pre-COVID, we actually could get you approved at a 580. Things are trending back down, so the industry may go back to that score. As we stand today, it is a 620, but just keep in mind, sometimes a 620 or from a 580 to a 620, that's not a big difference. And it's usually, sometimes we can point you in the right direction when looking at your credit to get you exactly where you need to be to qualify for a house.
So, and that's why we want to do this workshop today. Tips for the process. So if you know that there's some work that needs to be done, come and you're not looking to close on a house, in the next 30 days, come do the work now. If you have a plan that, hey, in, the next 2 years, I want to buy a home, but I know that I have work I know I need to work on my credit report, because it's easy to get into trouble with your credit. It's really hard to get out. It takes a lot longer to get out of trouble with your credit. So come now, and Jessica and her team can assist you. But here at Southwest Louisiana Credit Union, we can help look at your credit report, pull it for you or bring us a copy of it. We can take a look, go line by line with you, sit down with our financial education specialist, and she can say, hey, let's look at how we can figure out how to pay this off, or hey, you need to contact this creditor, because things can potentially come off of your, credit report if you do the work and are diligent about it. And we can help you to do that. So like this slide says, review your credit report now. It's always a good time to get one of your free credit reports from annualcreditreport.com. You can get a report from each reporting agency one time a year. So might forget TransUnion, Experian, and Equifax. You can pull one from each of those reporting agencies each year from annualcreditreport.com. So technically you could get 3 credit reports per year, one from each agency. And you can pull that, compare, look at, look at your name, how your name's spelled, addresses associated with your name, work history, things that are reporting on your credit report. Make sure that all belongs to you, and do that kind of work now, so that when it's time to come and get pre-qualified for a mortgage loan, you've done the work, your credit score shot up 30 points or 50 points, or maybe even 100 points, who knows? So like I said, if it's something that you want to do in the next year or two, and you know that there's work that needs to be done, get started on that work now, maintain the progress. And so that whenever you get ready to come, you'll be in a comfortable position to where your credit won't be an issue for you. And like I was saying, we can help you fix your credit. So, don't feel like you have to be overwhelmed with trying to navigate that and figure that out. Being a part of Southwest Louisiana Credit Union offers you this service. We are 100% certified financial counselors here at the credit union. You can come in and make an appointment and just say, hey, I would like to sit with somebody and to see what I can do about my credit, or see how you can help me work on my credit score, or dispute some things on my credit report. We can help you find those addresses, help you figure out what kind of letters you need to write ahead of you making those big decisions where your credit score is going to be heavily influential in getting the best rates and things like that. Because you want to always get the lowest rate possible, even if you're going to buy a car or whatever. You want to get the lowest rate possible, because interest is just money I always say that you throw away, that you have to throw away. So you want that interest rate to be as low as possible, and you want to be able to qualify for that. So we can help you here. So you can come by in one of our branches and make an appointment, or call us and schedule an appointment. Soon you'll be able to do that on our website. So that's coming soon. And to help get you in a position to where you can sit down with Jessica and her team and be comfortable and be ready to apply for that mortgage loan. So what about interest rates? We just finished talking about interest rates. Do they change much, and how can you get the lowest rate?
Well, rates do change every day, sometimes multiple times a day. The advice I would give you guys, as far as just trying to get the best interest rate you can, is just, again, making sure your credit score is as high as possible. Be prepared, because sometimes you can also buy down your rate. Sometimes the area will impact your credit score. I'm sorry, your interest rate. So, just keep in mind there's several factors that go into a rate being given on, a mortgage. But that's a few things that you guys can, take advantage of and be prepared for when, you're getting ready to purchase a home.
So I'm just going to stop really quick here. I think we answered this question. Again, you can type questions into our chat box if you have questions that you want to ask. Someone in the chat just asked, do I need to be on my job for a certain amount of time? I've been in school for 2 years.
So as far as, we would like to see a 2-year job history. So you can be in school and still work a part-time job. You're still working. So for instance, let's say you're in school working on a degree so that you can get a better job. But you're working part-time jobs, and as soon as you're done with school, you get a job, full-time job in your field. So, we can still consider that. For instance, you can be in school and never work. And this is key. And a lot of people don't know this, but let's say you're studying to be a nurse, and then you get out of school and you go right into that field. We can use your school transcripts as job history, as long as you're going to work in the field that you have your degree in.
Oh, very good to know. Very good to know. All right. Let's see. There we go. So how much will I need for a down payment? Down payments can vary depending on the type of mortgage that you have, but you can estimate between 0 and 20% of the home's value. So different mortgage options based on the type of mortgage loan that you get, that you choose to go with, will require certain amounts of their down payments, and that's what that 0 to 20% is. So you heard us talk about rural development, and where Jessica mentioned that being 100% financing. That's through the USDA, and they don't require a down payment.
Right.
Although you may have some other fees and things associated with that you're going to need to bring money to the table for. And a conventional loan requirements, down payments can be as low as 3%.
As low as 3% for first-time home buyers. The average is 5%. So if you think of the different mortgage programs, again, it can be from 0 to 20%, but your average is 5% for the programs. So just, kind of keep that in mind. If y'all have, more specific questions about it, we'll be more than happy to answer them, but just, keep that in mind as far as an average is 5%.
Okay, and then FHA looks like the down payment is about 3.5%.
Right.
And VA. So if you're a current or former military veteran, there's programs through the military that you can get or pursue that do not require you to have a down payment.
Right. So VA loans is for people that's been in the military. It's 100% financing, and it doesn't, require any down payment. But again, you still have other costs that's associated that you may have to bring to the table. But just like USDA and VA, there's no down payment piece to that.
So Jessica, with these 4 different options, I know like with USDA and USDA, I know you have to have a home or be looking at a home in a rural area basically. And then VA, obviously you have to be military. But other than that, do you get to pick which one you want, or do you have to qualify for a specific one?
I mean, you can pick which program you want. Sometimes it really depends on your preference. The average person stays in a house 7 years. So sometimes they may want to go FHA and put that lower down payment because they know they're not going to stay in that house. So you really can choose which program you want to go with.
Okay, good to know. So what do I need to get pre-approved? So we talk about here at the credit union, we talk about getting pre-approved, even for when we're talking about getting a loan for a car. We tell people, come find out what you qualify for first. So come get pre-approved first. So you have the buying power. You then have buying power. You know what you qualify for. You know what you can afford. It puts the power in your hands. So therefore, you're not forced into a situation or not, influenced into something that you may not necessarily be able to afford in the long run. So with the home buying process, getting pre-approved has some definite things that you have to take care of. So Jessica, the uniform residential loan application.
Right, that is a standard application throughout the industry that we'll use. And that just gets us to get a lot of vital information from you so that we can, start the process. And keep in mind, when we pre-approve you, we're just giving you numbers based on credit and what you stated or gave us in income. Once we're done with that phase and you find a house, we move on to the next phase where we will have to verify those things. But, as long as the information that's given for the pre-approval process matches up, then, it'll, be an easier process. And, the house or the number we gave you, the figure we gave you that you qualified for will, you won't match up and you won't have any problems with that.
So this was new that I didn't know. So when you come to get pre-approved, you have to have proof that you have money for your down payment. So whatever monies may be required based on those programs that we just talked about, whatever that down payment requirement is, if it was 3%, 5%, whatever, I need to have that money, be able to show that I have, if that's $5,000, I'm just arbitrary number. If it's 5,000, I have to be able to show that I have $5,000 available in my savings account or whatever account, that if I close today, I can go get that $5,000 and pay the closing costs.
Right. So part of the pre-approval process, it's a short application. Those blanks on that page is there for a reason. And we do need to know where the funds are that you're planning on using to purchase the home. So rather than your 401k, there's a box that you check. That's where the funds will be coming from. So again, be prepared, especially if you're looking for a pre-approval, where your funds are gonna come from.
Okay. So you verification of all your personal information, income, and monetary assets. So just know that in the home buying process, you're going to have to give up all your information. Okay. So you're going to have to give it up. You got to give it up. You have to give up your bank accounts, how much is in them, what's coming out of them, what's going in them, checking accounts. You're going to have to give it up. So Jessica and her team will, but it's all in an effort to help you. It's not for us to just be nosy and want to know what you're spending your money on. It's to help you be able to comfortably afford and getting to a home that you're going to love and that you're going to not mind paying for a lot of years. So anyway, but all that comes, there's a lot of players in the game when it comes to real estate. So we'll talk about, how long it may potentially take in a few more slides, but, purchasing a home is not like coming to get a loan for a golf cart or a car. Like it's a lengthier process. Doesn't mean it has to take a long time, but it's gonna, like, today's Friday, we won't know by Monday if you're going to get a home loan. It takes more time. There's attorneys involved. There's underwriter people,
Underwriters involved, there's appraisers involved, sometimes there's surveyors involved. There's just many players when going through the home buying process. And so that's why, we're waiting on other things, other verifications. It's just so much that go on behind the scene that, we have to do. And that's why the process sometimes takes longer, and we're having to depend on others to provide us any mortgage. When you're getting a mortgage, anyone with a certain service. So, you just have to be prepared and you have to be patient. But again, that's why we're here today, giving you the knowledge so that you are prepared. It's not a scary process. Right. It can be an easy process, but it is sometimes lengthy. So you just, want to be prepared.
And it's going to take some work on your part too. So you're going to have to, be gathering that information. She may need printouts of things and you to email stuff back and forth. So, you want, that's a dedication or obligation of time that you have to commit to the process. And so, but it's great in the end, when you get to that closing table and you get to sign and you get the keys to your home. But this is kind of like a heads up on some of the things that you can be getting in line now. You'll need tax documents. So, when you file your taxes or the ones from this year, if you're looking at doing this in the near future, make sure you have your tax documents handy. If you're a business owner, make sure that you filed your taxes and that you have your profit and loss sheets and statements and that you have your documents in order. If you thinking about doing this, anytime in the near future, start organizing that stuff now, maybe making a file or something that says, dream home, and start putting that stuff in there. So when you're ready, you can walk in here and just hand Jessica your file and your application, and she can get working on it for you. Your bank statements and any accounts, retirement accounts, and they're gonna have to verify your assets. So she's gonna have to get in your business a little bit, but again, that's part of the process. And so it's not just us here at Southwest Louisiana Credit Union. It's going to be any mortgage lender anywhere that you're going to have to work with. That's just part of the real estate and the mortgage process. So that's why we're here, giving you a heads up on it. Is there anything else you want to add on this?
No, just again, it's not a scary process. We help walk you through the entire process. We prepare you from the beginning. We tell you exactly what you have to bring. So, just, follow what we say and the process will go smooth.
Very good. Very good. So I really like the part that she added in about, we're going to walk you through the process. That's part of the credit union difference. That's part of the Southwest Louisiana Credit Union difference. Jessica will sit down with you and be straight up with you and tell you, this is what you need to do. This is who you need to contact. And if you follow those steps, we'll hold your hand through the process and walk with you to the closing table. We're not going to just, hang you out to dry. Like, we're going to help you to get through this, and we're going to get through it together. Okay, so this says, don't be denied. Keep these important issues in tip-top shape. There are several reasons a home loan may be denied. So, of course, your credit score just being absolutely too low. Debt to income ratios are too high. And so we told you a little bit earlier on how you can start figuring out where you currently are with your debt to income. Because it may be that you need to get a side job, maybe start earning some extra money to get some extra income in. And it may be something that, like you say, you're planning to get a home or purchase a home in the next 2 years. So you get a part-time job now and start working and saving that money if you know that you're going to need some extra income. Down payment funds aren't enough. You don't have the money, put aside for the down payment that you're going to need. Appraisal came back low. You don't have the documentation. You haven't filed your taxes in a lot of years, which is not good. But are you job hopping, changing industries, changing different jobs, you're staying on your jobs, 2 months here, 2 months there, 6 months there, and then they're not even all in the same industry. And I've added this bad choices and bad timing, where you're continuing to get into debt. If you're getting ready to purchase a home, you might not, don't go, and you've already figured out what your debt to income ratio is, don't go get any other big notes, any other big loans because that's just going to make your debt to income ratio higher. Or you're spending your liquid money that you would use for a down payment on some non-essential items, or, just fun. And, now you spent all the money that you saved aside for your down payment or for those closing costs and things. So you'll have, once you can get your home, I think once you get your home, you can go buy probably whatever else you want. But or hopefully you'll be able to. But when you're in the process of wanting to buy a home and get a mortgage loan, you have to be mindful of what extra expenses you're taking on, or what extra debt you're getting into that may not be in the direction of the approval that you want to have. The bigger picture is probably getting the home for your family and for yourself. So thinking about what you're spending your money on, or what you're signing your name for during a time when you may be wanting something bigger for yourself or your family. So that's kind of what bad choices and bad timing means. So anything?
Well, I do want to add to it. So you just want to keep in mind that once we start going through the mortgage process, that we're monitoring your credit. We're not pulling it. It's a soft look that we can see everything that's going on. So once you get that approval, you want to keep your financial, situation that way. You don't want to change it, because if you go and add a new debt, we will see it, and we'll have to factor that in to your debt to income ratio, which can potentially have you denied. So you just, again, want to keep that in mind. Talk to your lender, ask questions, and as far as us giving you that approval, most of the time it is an approval based on what we see. But don't, it can be, your loan can still be denied once we give you an approval, because we have to still go through the underwriting process where we're verifying everything. So you want to keep everything the same once you start going through that process. And again, getting prepared, being prepared, getting debt paid down before you start this process. So, you have all those, things out of the way. So you just make the process smoother and easier for you.
All right. So this is kind of a quick little recap. Start saving now, build/fix your credit, pay down your debt, no new bills, gather your documents up, come and see us, get that pre-approval, shop for your house, and own your new home. So these are just, some things that you can be doing now, just good habits. So these are just ultimately, some of these are just really good habits to get yourself into, whether you're buying a home or not, like saving. So it's always a good time to start saving some extra money. If you know that your credit is questionable and your credit worthiness may not be where you aspire it to be, come in and talk with us. Talk with one of our financial counselors, our certified financial education specialist. She can help you to get your credit in line, pay down the debt that you currently have. You don't want to be paying on stuff forever. Your mortgage loan is going to be long enough. No new bills. We don't want you to stop living and stop enjoying your life, but think about debt to income whenever you are purchasing new items, and see, do you have the wiggle room in that to be able to take on extra bills. And of course, just keeping your documents handy and in a safe place, your tax documents, business documents, whatever. And we always want you to come see us, but come see us. And then, we can get that pre-approval process started, and you can start dreaming, you can start shopping for your house, start looking around, making your wish list and that kind of thing. And we'll get you to the closing table so that you can own your new home. So how long does the process take? Tell us.
Well, I mean, typically a rule of thumb or what we look for is 30 to 45 days to have it all completed. But again, you have to keep in mind we're dependent on others to provide us with certain documents. So sometimes the process will take longer if things are being, taken longer for us to receive. Or things come up when we're doing the title work that will delay the process. Other than that, a typical 30 to 45 days is a good turnaround time. So,
and that, I'm sure all those steps that we talked about getting your stuff in order now is going to help you to get through the process quicker. If, we got to start the financial counseling and the coaching and fixing your credit during the process, then of course you're going to add months probably on top of that.
Yeah.
So do the work on the front end. So like I said, start building your little file now, putting your information in, working on your credit. Come talk to us. We can help you get your credit fixed or, start mediating some of those glaring issues that may be there, getting some of that taken off and cleaned up on your credit report so that when it's time, you get that done in a few months or whatever, you can come sit down with Jessica comfortably and say, here's my file, go to work,
right. And just
do your best work.
Right. And just to add to that slide that we showed you guys about the annualcreditreport.com, that is a good website to start. You can get your credit pulled and anything that you need to fix, you can submit it right on that website. So you can even print out your credit reports and bring them to us so we can help you look at them to see what you need to take care of. But that website is something you guys need to jot down because it is a very good website to go to. Yep. And it's, again, a lot of people do free annual credit report. It's not that, it's annualcreditreport.com.
Yep, annualcreditreport.com. So, and that's not a hit on your credit. Again, you get one per reporting agency per year. So technically you can get, and I've even heard people say, they pull it one time in the spring, one in the summer, and towards the fall, so they kind of look at it at different times and spaces. They pull one the beginning of the year, the mid-year, and then at the end of the year, and kind of look at and see, you can see changes and things like that happening. So annualcreditreport.com, you can always start to look at that. All right, so again, our real estate department here is actually 3 strong ladies in there, 3 ladies strong holding it down, but they absolutely get it done for you. Our 2 real estate agents here are Jessica and Sandra. And so you can call us to schedule an appointment to meet with Miss Jessica and or Sandra at 337-477-9190. Their office is currently located at our McNeese Street location, located at 2255 East McNeese Street on the corner of McNeese and 5th Avenue. So you can come by and schedule an appointment. They are really, really busy. I'm so happy that she had time to do this with me today. But they've been really, really busy. And it goes to show that, that our members trust us. Our members want us to help them live out their dreams of owning whether it's a first home or another home. And so the real estate department's been very busy. And I say that to say, you may not be able to walk in and just talk to them or really get all your questions answered. So it's best to schedule an appointment with them. They can get you on the calendar and get you in, and you have quality time to really lay it all on the table, and they can help answer any additional questions that you may have. Looks like we have something in the chat here. Oh, it just said it's been very informative. Thank you. Thank you so much for letting us know. So again, make that appointment with us. Let's see, I know I have another slide. So we want to thank you for joining us on this episode for the month of July for Smart Money Moves in 2021. Smart Money Tips for the first time home buyer. We hope that you have enjoyed it. We've enjoyed giving you this information, and we still have some time. So if you have questions, you can still drop them in the chat or the question box, the Q&A box. We'll be happy to answer them. or you can come by and see us, and we'll get whatever we can get answered for you. So thank you for spending your lunch break or just part of your Friday with us. And we hope that we've been helpful to you. We want to thank you for being a member of Southwest Louisiana Credit Union, and we look forward to serving you soon. Thank you again and have a wonderful Friday. Bye-bye.
Bye-bye.